negativity. I didn't like the fact that even Cater Ubri was commenting about how the charts were bad. Dave Costin had some things at Goldman that were somewhat positive. But I've got to tell you, overall, Jeff, you know who's really winning in all this? It's the oscillator, which said stay away.
Yeah, it was back to overbought yesterday. So it was good.
It's just a dicey thing to get involved. Now, I see a lot of things that I like because, rates, people are worried about rates going up. They're worried about the dollar going up. I think rates could stabilize. I think the dollar could go down. But one of the things that is, I think people are too peripatetic about. We have an opening of China. Okay. That's a very big deal.
Sure.
But now the oil market's ignoring it. The opening of China is a really big deal for people going out. Don't ignore it. Buy Estee Lauder.
Right. Simple. Yeah. A big upgrade today. Estee Lauder over at Deutsche Bank. It's interesting because Deutsche Bank actually downgraded 7 consumer packaged goods stocks today.
Right. And I was.
But the lone upgrade was Estee Lauder. A lot of it is obviously going to be more confidence in that China reopening. Also confidence in the recovery in makeup, which was a big business that was hurt in the pandemic. People stopped wearing, they wore less makeup because we were going out less,
so
going to work less.
You combine Ulta, which is the biggest in this country, which told me last night that MAC is doing incredibly well, very high profile, high margin product for Estee Lauder. With the fact that China's opening and more travel because duty free is big, this is the one to buy. It's down 100 since we sold it, and I think you got to buy. Got to be there.
Yeah, and I think this upgrade and some of the recent rally in Estee Lauder, it kind of goes back to the thinking that what we said when they reported that disappointing quarter not too long ago. But it was you had to buy ahead of when China reopens because that's where the big gains are going to get made, and we've seen that over the last.
And Starbucks, the same. I mean, someone downgraded Starbucks yesterday, and I thought that was a very bad call because Starbucks could have multiple new stores, and you're going to end up with a situation where you're going to say, I sold it here because, and then you'll say, I forget. And that's always a great indicator of what you want to do as a portfolio manager. You have to say, if you look back 3-4 months from now and you sold it, would you remember why you sold it?
Yep.
And the answer would be no, because there really wasn't anything that had changed. At the same time, I'm dealing with 2 CEOs this morning, Jamie Dimon, who once again presented to me a story of that you could be. This is a major bad time. And then I have Darius Damchek at Street Honeywell talking about being opportunistic. I like. Like the opportunists.
Yeah, what do you think about what Darius had to say? I mean, his business is doing so well right now because it's levered to aerospace, which is obviously benefiting from that recovery. But even their energy business, there's some sustainable fuels going on, some green tech, decarbonization trends that go their way.
I mean, Honeywell's another one of these companies, not unlike Caterpillar and like Emerson, that have you look at that, have chosen to reinvent themselves. They recognize that people want to be greener. You hear all these companies, they say, listen, we have our goal. And our goal is to be carbon neutral by 2040, 2030. Well, you can't just do that. You have to call in actual companies that work on climate controls. That's Honeywell. That work on the way that you do your day-to-day manufacturing. That's Emerson. These are the companies that work in this environment. And what doesn't work in this environment is enterprise software. Even GitLab is having a coming back after a monster quarter last night. Mm-hmm. So I want to go back and let me just summarize what Darius is saying in my book. Darius has reshuffled his portfolio, and now he's got the right products for the right time. Now, Darius is too conservative to say, listen, we're going to have a great year. But what he is opportunistic. Yeah. Jamie Dimon, on the other hand, makes me feel like I should be frozen in place because it's so dangerous out there. It's been dangerous out there all my life. Okay, all my life. We have a Fed chief who everybody said was way behind. And now, what did he do? He caught up. So now what did he do? Well, he's made it too. So it could be really bad. The economy could be. There are times in life where you must say, this is good. And what the Fed is doing is good. It's going to help us all.
Well, JP Morgan and CEO Jamie Dimon, it's an interesting case study today because you do have Mr. Dimon warning about the economy, but at the same time, Morgan Stanley actually double upgrades JP Morgan stock from a sell to a buy. But one of their preferred names is also Wells Fargo.
I think it's their most preferred name.
Yeah, they increased their price target to $60 from $54. I know CEO Charlie Scharf was also speaking at the Goldman Sachs conference today. But their thesis there is excess liquidity, rate sensitivity, and operating leverage as business improves.
But he also made the point that he is still dealing with the terrible misdeeds of the previous administration.
Right. All those consent orders.
Right. Many more than he realized. He got in there. He's been playing defense for a very, very long time. And I think it's important to point out that he's done quite well despite that. And I believe that Wells Fargo is still a buy for new people who are coming into our program. There is a lot of misinformation going on right now about how banks do it when rates go up. And the most important thing is what Charlie Scharf says, which is that, we get your deposits and we're able to invest them risk-free at good prices. Yep. That's what happened in 1999.